Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we've got another trade breakdown video for you. Now, it's been a while since I've done one, so I thought I'd bring them back at the start of the new year since you guys do seem to enjoy them. Now, this one's a little bit different. I've got two trades in this trade breakdown video, both in Euro Yen, one loss and one win. Minus 63 pips on the loss and plus 232 pips on the win. I'll give you guys all the reasons why I entered both trades, management, take profit, entry, stop loss, my thought process and emotions, and I'll give you all the breakdown of those trades plus some tips and advice for you guys going into your personal trading. So if you guys are enjoying the content, please be sure to leave a like and subscribe if you haven't done already. Hit the bell so don't miss out on any uploads. But yeah, guys, let's get straight into the video. Okay, guys, so welcome to the chart. So as you can see, we've got Euro Yen here on the 4H time frame. These are both of my positions that I took. Minus 63 pips on the loss and plus 232 pips there on the win. Like I said, I'll give you guys a full breakdown of why I entered the trades. Now, most of my analysis is done in the 4H, but I do take a look at the daily and the weekly just to see what's happening on those time frames. And what I got was not much from these time frames, to be honest. Most of the market's kind of sideways. There's a slight uptrend as we can see here, but it's getting very, very corrected now, which is another reason why I was happy to take the shorts, because I knew the higher time frames weren't really trending to the upside as aggressively anymore. So the shorts were high probability of me taking them on the 4H and the hourly time frame. You can see on the weekly as well, slightly a bit stronger uptrend, but still very, very corrective. So there's going to be room to the downside on the 4H time frame. So on the 4H is where I did most of my analysis and prepared for these trades. Now I can clearly see the 4H is giving me a lot of bearish structure here. If I just highlight the major swings, we've got the high, got the low, got the high, got the low, got the high, got the low. So as you can see, the market's consistently making lower lows and lower highs. This here was a big fake out to the upside, just about taking out that high, catching people on the wrong side of the market, and then absolutely collapsing to the downside, giving us some new lows there, new lower high, new lower low. And obviously in hindsight, we can see the market made a new lower high. I'm expecting the market to continue. So the idea of this trade was basically to find that next lower high, to look for that next bearish leg to the downside. Nothing more crazy than that. I can see what the structure is doing. So as a, probabilistic mindset, I'm looking for the market to continue what it's doing until it doesn't. So as long as the market maintains this bearish structure, after I saw this pullback, I'm looking for the next lower high to form to catch it before I move to the downside. Now, here comes to my entry and confluences for the entry. So for the first trade, again, I typically look for around 3 confluences before I do get into the trade. And for this one, I had some really nice confluence for this one. So after a strong impulse, I'm looking for some entries at areas of value. I can see the market is now lining up with this prior level of support, time resistance. I can see we do have a trend line coming down from these highs over here. So we've got first, second, third, and potentially fourth test there as well. Also, Fibonacci was giving us some nice signals here as well, as we can see coming to 0.618 there. I don't know if you guys can see that, coming to the 0.618 there as well. So I did have more than enough confidence here to get into the trade for some shorts, and all I do is drop to the low time frames, the hourly, to look for my entry signal, because I know this is an area of value. So dropping to the hourly chart, my entry was on this candle there, that second bearish candle after the close back underneath the trend line, and we saw a little bit more momentum come into the charts. And then I entered the candle there, and as you can see, 2 candles later, I was taking out the trade very, very quickly. So that was a loss there. For me, I knew that the overall direction is still to the downside. So the way I trade is very, very much based on structure. That's how I get my direction. So I knew as long as the market, let me just move this out of the way. As long as the market didn't take out this high here, I'm still gonna be looking for sales. I'm still looking to get back into the trade. And because I know my risk to reward when I win, my risk to reward is greater than 1, so I know when I win it's going to be more than I lost. So I'm more than happy to get back into this trade as long as I get another good entry signal, because I know if I do win that next trade, it will definitely cover the loss and still put me in profit ahead of it. So after I took that loss, it was obviously unfortunate, but I knew that I still do have a winning setup here. I just need to be focused and ready for the next opportunity if I was to get one. Obviously, if the market ran through this high here, I'd fold my arms and potentially look for buys going back up again on some retracement. So the next area of value I had for Euro Yen was price coming back into this high over here. So we've got resistance, we've got the double top there, and also we've got a larger and stronger trend line in the market, which I noticed connecting these major lower highs here. So let me remove this trend line out of the way. As you can see, you've got first, second, third, fourth. This again was the big fake that we had. And now we're having the fifth test of that trend line. So I know we've got great confluence here coming to that double top area. Really strong resistance was the prior lower high, which gave us that drive to the downside. And now we're pushing back up into that resistance alongside with that trend line confluence. So I knew there was enough confluence here to get a good reaction and a good probability we could be forming the next major lower high for a swing to the downside. So again, dropping to that hourly time frame, where I found my entry on that nice bearish candle there. I can see the market was very, very corrective. So I knew the chances of us breaking through were quite low. We weren't really seeing big candles. The market was very, very corrective. So, if this level is going to hold, most likely we're going to see a very quick reaction, which we ended up seeing. And the market completely plummeted to the downside. It had a couple of areas, actually 3 areas for my for me to take partials. My first area was coming back down into this area here. That resistance turned support, so I secured some partials there, secured some more over here, and finally secured down here as well. And that's why I completely got out of the trade for my TP3. Obviously, in hindsight, people were saying, why didn't you hold into the trade? If that is going to be the next lower high, you could probably expect price to come back down here and potentially go a lot further. We could have ended up going for there for like a 1 to 11. But, that's never really in my plan in the first place. All my plan is based around is suitable risk to reward, around 3 to 4 R per win, and obviously -1 R when I lose. And that's all I'm looking for in the market. I'm not looking to hit the home runs every time. And in fact, it's very, very difficult to hit the home runs every time because, with the hindsight kind of perspective, it's very, very dangerous in trading. Like a hindsight strategy, I call it. If I looked at this in hindsight going, I should have held it all the way down to those lows. Next trade that comes around, I'm going to try and push it too far and just not take my profit when I should, and probably get stopped out of break even or potentially loss, depending how I'm managing the position. So it's all about the consistency and taking pieces of the market out into your trading account, not trying to go for the home run. Caught a very good entry there. Obviously, it would be nice to hold all the way to the bottom. That's not how trading works. It's about taking what you need from the market and moving on to the next position, allowing your edge to play out, not trying to milk every single trade, because it just won't work like that. So yeah, that's how I went about it. And obviously the mindset as well. A couple of years ago, maybe 2-3 years ago, I probably wouldn't have taken that second position because I would have been hurt from that first position loss, thinking really I don't want to get back in because I might be losing another trade. So I probably would be very hesitant getting into that trade, or I probably just wouldn't get in at all. But now I'm very confident in my strategy. I know the edge will play out in the long run. As long as I'm taking quality setups, which that was a quality setup, there's not much to be fazed about. As long as you have a positive risk reward, quality setups, even if you're winning 40% of the time, as long as you're taking 2-3 R from the market when you win, you will come out profitable at the end. So that was my thought process at the time. Got into the trade and it was a very nice trade. It just went in my favor quite well, actually. As you can see, 4H candles, and it was already hitting my final TP. So really, really nice move there. And again, the key thing to take away is don't try and be greedy, because obviously you want to try and push the trade as far as possible. Obviously you can do that if you have a trading stop loss and that's your strategy. That's perfectly fine. But if you have set TPs like I do, respect your TPs. Don't try and push it too far, so the next time you do, you will be humbled from the market. Just carry out your plan. That's your only objective. That's your only job to do. Again, we have our trader caps on and our analysis caps on. We're traders first, analysis second. As an analyst, I'll think, okay, there's a good chance probably price will head back down to here. As a trader, I'm looking, okay, where's the next possible area that buyers could step in and reverse price? All these areas here are potential areas where buyers could step in and take the market higher if they wanted to, or if they were successful enough. Obviously, in hindsight, they didn't, but that's what I need to be thinking as a trader. Where's the next area of value in the market? As an analyst, I can say, okay, this might go there, that might go there. But I'm a trader first, analysis second. Don't have it the other way around. But yeah, guys, that's the overall kind of overview of those trades. Again, nothing too complicated. All it is just playing with the trading structure that we've seen here. Bearish structure there, continuing looking for some sales until the structure breaks. And then trading with confluence. Make sure you're entering at the right places and not trying to push trades too far. And the third lesson is just make sure you're playing out your edge. You can see I took a loss there, but made it back and then more with the winning trade there. And that's all trading is. taking losses, taking wins, just make sure your wins are greater than your losses. But yeah, guys, I hope you have found value in this video. If you want to see more of them, let me know down in the comments. If you have enjoyed it, let me know down in the comments as well. If you haven't done already, subscribe, leave a like, it really does help out the channel. But thank you so much for watching the video, guys. Take care, and I'll see you all in the next one.